Okay, good evening, everyone. It is May 8th, 2025, 6 p.m. and I'm calling the Clackamas River Water Board of Commissioners regular meeting to order. If you would stand with me for the pledge of allegiance. I
pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Roll call, please, Karen.
Let's see, Commissioner Donnell.
Here.
Commissioner French.
Here.
Commissioner Robichaud.
Here.
Three present, Commissioners Garrison and Andrew are out.
Okay, thank you. All right, okay, approval of agenda. Does anybody have any questions, deletions, whatever? No, then I will accept a motion to approve the agenda. Yeah.
I move to approve the agenda as presented.
I second the motion.
Commissioner Donnell.
Yes.
Commissioner French.
Yes.
Commissioner Robichaud.
Yes.
Motion passes unanimously.
All right, public comment? Do we have anyone? Okay, all right, no public comment. All right, now we're gonna go to information reports. This one is the 2016 bond refinancing overview by David Albright.
Albrecht, that's fine.
Albrecht, okay, sorry.
no
SDAO
worries.
Advisory Services, and then Christina Irish, our own CFO.
I'm just going to give a quick introduction. The district is working with David at SDAO to review our debt payments to see if there's any cost savings we can find, much like we do for home refinancing, but it's also very different than a home refinancing. So David's going to provide a little more information to the board as we are moving forward in the process. And you should have your slides in front of you that he will be sharing on the screen. Go ahead, David. Thank you.
Well, no, thank you. And I apologize for not being there in person. I know the plan is to be there in person next month. So anyway, I just landed in Texas a short time ago and made an hour's drive and got to my hotel room in time for this meeting. Anyway, oh, and Todd, you know, in recognition of you, I am wearing a Yamhill Carlton hat right now.
Thank you.
So anyway, let me share my screen for you, and I hope everyone's doing well this evening. Okay, can we see that? See if I can.
Yes.
If you want to kick it into presentation mode, that works too.
Yeah, I'm trying to figure out how I do that. I'm not.
It's a little up right above design. Yep.
Okay, there we go.
Perfect.
Well, anyway, thank you again for allowing me to at least address you with this wonderful opportunity with the potential to save the district some debt service on its existing bonds and, you know, hopefully the ratepayers of the district. I'll give you a quick background. I know Christine did a little introduction, but so I'm the Director of Municipal Advisory Services at SDAO. I've been doing this now, well, July 1st will be our 10th anniversary year that I've been the director of this municipal advisories program that SDAO started. Previous to joining SDAO, I was an investment banker where I actually was doing the bond underwritings for local governments in the West. But now I'm an advisor and I am registered with the Securities Exchange Commission and Municipal Securities Rulemaking Board. And with that registration and the duties and requirements as your municipal advisor, as I have a fiduciary to you, first and foremost, and I have to look out for your best interests at all times above anybody else. So that's kind of the one difference between a bond underwriter and a municipal advisor is an underwriter doesn't necessarily have that fiduciary duty to work in your best interest because they're going to underwrite the bonds and, you know, they're in it to make money and they have to balance their service between you as the district and also the investors they may sell the bonds to. But for me, I sit on your side of the table. I help you through this process from start to finish and all the steps necessary that need to be done. And so again, I'm your advisor. I work for you and I have that fiduciary duty to you. So if there are any questions before I start the small presentation I have.
David, if I could just add one thing, just to put things in perspective. It says SDAO Advisory Services and stuff, and I just wanted to be clear. SDAO Advisory Services probably handles more municipal transactions in the state than anybody else. That's correct, right, David?
Yeah, we've done more transactions, municipal advisory transactions than anybody in the state.
Yeah. So it's not,
Yeah.
it's an awesome service that we get to work through SDAO, work with David, but I also want the board to be reassured. We're working with people that do most of this work for others in the state, so.
So Todd, does
Yeah.
David work for SDAO or is he contracted by SDAO to do these services?
So David, I'll let you explain that a little. I mean, it is
So it is a little complicated from the standpoint, I'm not a contractor of SDAO. I'm actually an employee of the SDAO Advisory Services LLC. And the reason that, so SDA owns the Advisory Services LLC. And the reason for that is because when I joined SDAO, I was already registered with the MSRB and the SCC. That if this would be like a program service of SDAO itself, that would mean the executive director, maybe even the board members would have to, and we did a whole legal analysis of this. They would also have to be registered with the SCC and MSRB. So we were able to, by having this independent LLC, which is owned by SDAO, we can get around those registration requirements of everybody at SDAO that would be involved or have any involvement in it. They don't have to be registered. And so I'm the one that holds the registration. I'm the municipal advisor. I'm the principal advisor with my licenses. I have the Series 50 and the Series 54. And so that's how it works. But actually SDAO owns the LLC as a single member. I manage the LLC, and then there's an administrative services agreement between SDAO and SDAO Advisory Services LLC. So the reporting line through that administrative services agreement runs to the board of directors of SDAO.
Yeah, perfect. Just one follow-up question, and maybe my colleagues would know. What is MSBR?
MSRB, money service related business.
Okay, thank you. Thank you.
So.
Yeah,
like a business
Yeah,
that-
MSRB is the Municipal Securities Rulemaking Board, which is a self-regulatory body.
Okay, great. Yeah. Very good explanation. Thank you, David.
Oh, my pleasure. Thank you. So what we're talking about in this particular case here is the district has a current financing outstanding, the Series 2016 bonds. And I give a little, so this is kind of the financing team that we have in place. The district's bond attorney is Courtney Dowse. She was formerly with Mercer O'Shannon, who was the previous bond attorney on the last financing for the district. We went through a RFP process for bond underwriters. We sent out that RFP to 6 to 8 firms that do municipal bond underwriting, particularly here in the state of Oregon. Those proposals came into me. I pulled the summary together. We analyzed them. And then we met with the bond attorney and with Todd and Christine. I think it's Christine. I'm sorry about the spelling there. And we determined that the most effective, most efficient, and most responsible proposal came from Piper Sandler. So they will be the ones that will be engaged to serve as underwriters on this refunding transaction.
Can I ask a question about
Sure.
like how we determine who like wins, like you rattled off some of the requirements that we look at. Do we look at like how far do we look at the organization itself? Or are we just looking at what they offer? It's not the actual organization itself, like, for
Well,
example, oh, go ahead.
Oh, yeah.
Maybe you,
I
okay.
think part of the RFP is we're scoring them on different things. For one of them, experience, and David can give you more of that, but that is part of the scoring of the RFP, and one of those is like how they've worked in Oregon before.
Okay.
The familiarity of the team, if we've worked with them before. I mean, there's different things that are part of the scoring process on RFP. I think that's what you're asking.
That and like reputation, right?
Yes.
Like the reputation of the
Yes.
organization, like
Mhm.
those sorts of things.
yeah, well, I could tell you that most of the firms that we distributed the RFP to were at one time a competitor of mine.
Okay,
I know the players, I know the firms, I know the underwriter, and I've worked with Piper Sandler as a municipal advisor over the last 10 years very closely on a number of transactions, not only schools, but local governments. DA Davidson, who who underwrote the prior issue, they used to have a Portland office, but the two gentlemen that used to work there left and one went to a different firm who we gave them a proposal or an RFP to respond to. That individual has certainly experience in Oregon, but the firm itself doesn't have direct negotiated underwriting experience. And so that was, kind of on the scoring side, what's your experience doing negotiated underwritings? Another DA Davidson did get one, but the gentleman who responded as the lead contact, he has done some negotiated underwriting in the state, but he's on the East Coast. Then Raymond James, which has a Seattle office. They're a national firm. Um, they did not respond, unfortunately. The gentleman was out of town, and he did reply back that he's sorry he didn't reply. But we got three good proposals. One was from Piper, one was from DA Davidson, and one was from another firm called Mesereau. They're based out of Chicago, and they're the firm that is trying to open up an Oregon operation to do negotiated underwritings. So through that scoring, there's several areas that we looked at. One, we looked at their reputation and experience in the state of Oregon. Are they on the ground in the state of Oregon and will be familiar with the Oregon market? Then, of course, we took into account cost and the services that they would provide. And then also what they think at a particular date and time, because the market we all know moves all the time. But we pick a date and time in which they say, if that bond issue were to come to market today, where would you price that bond issue? And there's an index that's used, and it's called the MMD. It's the Municipal Market Data Index, which is widely used across the country to price municipal bond financings. And generally that index is a true AAA rated scale or yield for a general obligation bond. And that's the basis of the index. Like if you're familiar with mortgages, a lot of our mortgages are based off the 10-year US Treasury. That's the index things get priced off of. So this is just specific to the municipal market. And so we look at that spread component. Like if, for example, if the 10-year maturity is at 3.5% for a AAA rated bond that's voter approved backed by property taxes. And they say that for a revenue bond, such as your district, which is rated AA, there's a spread difference for the risk assessment. The higher the rating, AAA, the better. It's like your credit score. The higher your number, you're perceived as a better credit and a better risk. Versus a lower rating, there's that spread difference. So we look at that spread difference in addition to the cost, along with their experience and understanding of the transaction, any recommendations that might make, the experience of the people involved in the firm, and then also kind of, as Christina indicated, a relationship aspect. You know, who have we worked with before? Who do we know? And on that reputation side of it. So those are that's basically the parameters we use to select Piper Sandler over the other two proposals that were received.
Thank you for that. Good explanation.
Yeah.
Thank you.
Thank you.
You're welcome. So the next slide here is basically, this is just kind of a historical perspective. So the district had a bond that was issued in 1999 that financed capital improvements and also refinanced a 1992 bond. Then in 2009, there was another bond issue that was a refinance of the 1999 bond issue. And then we come into the Series 2016 bond issue that was authorized in November of 2015. And at that time, the Board of Commissioners authorized up to the issuance of $40 million of bonds. But that bond issue was only issued just under 20 million, so they only used 49.5% of that original authorization. And so the 2009 bond issue was not refinanced with the 2016 issue, because when that bond issue was issued to 2009, those bonds were not subject to early redemption prior to maturity. So they had to run their length and time. They have since been paid and matured. So the only bond issue you have now is the 2016. And with the 2016 bond, that's the issue we're looking at now to refinance, to realize a potential debt service and savings. Just a little bit of twist in that when you refinance municipal bonds, you have to rely on not only state law, but you also have to rely on federal tax law. Because local governments under the federal tax law can issue bonds at what we call tax exempt rates. So whoever owns your bond or loans you money, the interest they receive back, or their interest earnings they receive back by loaning you the money or investing in your district, is exempt from taxation at the federal level and at the state level. So that's why municipal bond financings are attractive, because folks don't have to pay taxes on that interest earnings. Versus if you had your money in a bank, the interest that you earn on your savings, you eventually get a 1099 INT form every year to show how much interest you earn, and you have to report that as income, and that's taxable income. So municipal bonds are tax exempt under the federal tax code. There used to be a technique that we used to use prior to 2017 that we used to call advance refunding bonds. An advance refunding bond would be that you would refund or refinance that bond in advance of its call date. So you'd sell a new bond, raise money, put it in an escrow account, and when the call date came about, that escrow would mature and pay off the old debt. Well, the Tax Act of 2017 took advance refundings away. So now we're only allowed to do what we call current refunding bonds, where you can refinance your bond within 90 days of its first available call date or redemption date. So in the case of the 2016s, we can do them anytime now, because the call date was May 1st of 2025 at par, without a premium or penalty. Whatever the redemption date's going to be, you cover the accrued interest to that date. So it's just like, in essence, you're refinancing your house and you're paying off the old debt. Now you got the new debt. So that's where we're at this point. And with that redemption provision, you can do it at any time, in whole or in part, on any date after that May 1st, 2025 date. Yeah, you have to do like 30 days out. You have to give 30 days at least it's like at least 30 days, no greater than 60 days notice of that you're gonna redeem the prior bonds or the 2016 bonds. So we could do these bonds at any time and we don't have to worry about, advanced refunding rules or anything. So that's just kind of a little bit of background of the debt that you previously had and what you now have outstanding as the 2016 bonds. So this slide basically shows, here's the refunding plan. There's 16.5, if you look at the tables, there's $16.5 million outstanding. We're gonna refinance those. And I assumed when we looked at numbers that we'd do it on June 15. That date's, this is all subject to change because we haven't actually picked the date in which the bonds would, the 2025 bond, refunding bonds would be issued and closed, and we haven't set that redemption date on what it's going to be. But for illustration purposes, to show you where we're at with the current savings environment, I picked June 15 of 2022. The next table shows you what maturities are being refunded or refinanced. So we're going to refinance the bonds that come due 2025 through and including 2036. And then there's these term bonds out there that come due in 38, 40, 43, and 46. So we're going to look at refinancing all these bonds. Now, in the second paragraph there, I give a little description that we could do this either two ways. If we do this, and this is a matter of playing with the yield curve. Excuse me. Sorry about that.
Bless you.
Thank you. So there's two ways we can do this. We could pick the day, say we're going to do it, say within 30 days of when the bonds are issued. Then we could do that with cash. We're going to sell the new bond, raise the proceeds, pay them off, say on June 15, 2022. But I'm also looking at the structure that might be able to save us a little bit more money, and that we would push that redemption date out a little bit. Say no later than 90 days, because we might be able to pick up some additional interest earnings in this escrow account, which will help reduce the new bond or refunding bonds principal amount, which would potentially increase your savings. So that's the strategy when we're working with the underwriters to take a look at. Do we just issue the bonds, take the cash, pay them off on a certain date within 30 days? Or do we want to look at the yield curve and maybe take advantage of the yield curve, put the proceeds in the escrow that will buy US government securities, and those will come due in 90 days, and the interest earnings thereon, we might be able to pick up some positive arbitrage to increase the interest earnings that may be able to be used to reduce the bond required to pay off the old bonds. And so that will, by the time we come to the next board meeting, I'll have a pretty good analysis on that to look at which option would be the most beneficial to the district. This next slide basically shows us we're going to raise $16.3 million in new bonds. With the current market, there's a potential to get additional proceeds of $500,000. And what I mean by additional proceeds is that over the last few years with the interest rate environment changing, investors are willing to pay more for a bond than what you're issuing, in that there will be a higher coupon rate on a bond, but by them paying more, it reduces their yield. So, for example, in this case, it looks like, I can calculate this real quick. For every dollar in bond that you issue, 16,870. The investors are willing to pay you an additional 3 cents for every dollar in bond. So your interest rate will be, so rates and yield work like a seesaw. If you pay $1 for a bond and it's at 3%, you have a level seesaw. if you have a 5% coupon and the yield is 3%, the price is higher and the yield is lower. Conversely, if you have a 3% coupon and the yield is 3.5%, that's what we would call a discount bond. So they're paying you less than $1. So the way the environment is right now, investors are willing to pay up a little bit more. They're going to get a current income stream of 5%, but when they get their money back, so if they give you $1.03, they're only going to get $1 back plus whatever accrued interest they have. So that 3 additional cents that they're paying you impacts their yield and lowers the yield. So that's the current environment we're in. So there's a potential to raise an additional $506,000. Those additional proceeds would go to pay off the old bonds. We know on June 15, 2025, to pay off the old bonds, it's going to cost $16,669,000. And that difference between the 16 million to 545 that's outstanding, that would be the accrued interest that would be owed on that redemption date. The estimated cost of issuance, that would be the bond attorney, my fee, rating agency, the bond registrar paying agent, other service providers that would be involved. And then the underwriter's discount is an estimate of what they're going to charge you to serve as underwriter on that bond. So that would be their commission, in other words, to sell the bonds to investors. That's how they get paid. The rounding or contingency is, it's when you sell municipal bonds, they're generally sold in $5,000 denomination. So you always round up to the next 5,000. So in this case, there's $210 left over. That $210 would essentially be, goes back to the district and can help offset the cost of issuance. So that's how the sources of funds we get from the new bond issue and how those sources of funds are applied under the uses of funds. The next slide I have here is just, again, this is, subject to change. This is just based on the current analysis. You can see the top line there, par amount of the refunding bonds is the 16,545. You're going to issue new bonds of 16,365. And those additional proceeds help offset the cost of issuance too, by the way. You could see the refunding, the net interest cost at 455, true interest cost 448. These are all present value calculations. Net interest cost basically takes the interest cost, estimated interest cost on a new bond. The true interest cost is a present value calculation taken in the interest rates on the new bond plus the estimated underwriter's discount. The arbitrage yield that's a tax code provision because the tax code says you can issue tax exempt debt, but when you invest the proceeds, you're not able to earn more than this arbitrage yield. If the interest rate environment were to be, say, 3.5%, you wouldn't have to worry about that arbitrage yield. But if the interest rate earnings that you can get on your money is greater than the 4.41, we call that positive arbitrage, which could lead to potential rebate of those interest earnings above the arbitrage yield. But in this particular case, you're not going to be holding on to the money very long. You're going to use it to pay off the debt that the arbitrage yield's not going to be coming to play on it, but we still need to make that calculation. You could see the average coupon on the prior debt is just about 5%, 4.99. The average coupon on the new debt is 4.77 basically. And where we're going to pick up the savings is because it's additional bond premium that comes in. The average life on the refunding bonds, and this is just a calculation that says the average life means that's how many years it would take to have half the debt repaid. So on the new refunded bonds is 12.7. On the old debt, it's 12.8 on the amount that's currently outstanding. the summary of the debt service savings table here, it says, okay, you're gonna get with this premium, you're gonna get 16,870,000. You have gross savings of almost $1 million. And then we take that gross savings over the life of the bond and we present value back to what it means to you today using the arbitrage yield or that bond yield of 441. And that says your net present value cash flow savings, which would include that $210, is just over 632,000. And then there's present value percentages there that show, based on the principal amount that was refunded, your savings is 3.8% on a net present value basis and 3.75 based on the refunding proceeds. Now, a general rule of thumb is that if you can achieve at least a present value savings of 3%, that's a good economic refunding. If it's below that 3%, you're not gaining the benefit, the benefit's not as great. And you wait for a day where it's, you could get that 3% or greater. So based on the current environment, you're at 3.75. So there's an opportunity in the current environment to realize this debt service savings. This slide is hard to see, but it shows you basically, it compares the old debt to the new debt. You can see net new net debt service in those columns, and then you have the old net debt service. Then you have the savings per payment, and then on the far right is what the estimated fiscal year savings would be for your budget year. And then this last slide is just a fancy dancy chart that shows you the blue is the proposed, their estimated new bond issue refunding bonds. The orange is what you're currently paying on the 2016 bonds. And on the right side axis, there's that green line that shows you the difference on an annual basis, what the savings are.
Question, clarification. So what I hear you say is that the savings or the earnings is coming from that premium offering of the 505,000. So taking this back out there to re-offer is where we're seeing this increase in overall savings, right? Minus out the cost of doing it. Nothing's changing too much because the term is staying about the same. It looks like the rate's about the same, but because we're getting this offer premium, then that's gonna enable us to save almost $1 million over the life of the bond, correct?
Correct, because you're basically using that premium to pay your cost of issuance, and then you're paying down the debt further than you would
Okay.
otherwise.
Right, and that is something that is guaranteed, right? The 505 when it goes out there, is that just kind of an approximate based on historical? That's what happens when you take it back out there?
So that's again, that's just a point in time, okay?
Okay.
So based on the current environment, that's what we have currently, based on the current market. So
Okay.
the process going forward is that the board will adopt a resolution authorizing the issuance of refunding bonds to pay off the old debt. So once that happens, what we have to do during this time is what we develop what we call a disclosure document or the preliminary official statement. And that disclosure document or preliminary official statement is the district's document telling potential investors information about the district so they can make an informed decision on whether to invest in the district's bonds or not.
Okay.
So then when we're developing that, you'll get a chance to review it, ask questions along the way, but that will be prepared. So it's like looking at a prospectus of a stock or a mutual fund.
Okay.
You're providing information to investors so they can make an informed decision. So once that gets finalized, we call it the preliminary official statement because it's basically official, with the exception we're missing the pricing information for the new bond. So when that gets finalized, we basically, it gets distributed out to investors to review. Then a week, maybe 2 weeks, no later than 2 weeks after that's distributed to the public for review, we have what we call a pre-pricing date. We pick a date on which we're going to offer the bonds to the public. But before that day, we have a pre-pricing date. So we sit down with the underwriter and we start talking where they think the market is for your bonds. And so they give us an indication where they think the market is. And it's at that time that, and I think this is one of the advantages of me serving as a municipal advisor now, is I used to sit on that other side of the table. So I know how, for lack of a better term, I know how the game is played. I know where the investors are, I know who buys these things and all. So I have a good working relationships with the firms and their underwriter because they understand I know where the market's at. So if we go to the pre-pricing and we think that spread that I talked about earlier on the MMD, if I think that spread is too high, I'm going to say, I think you should go out with lower spreads based on other transactions that may have come to market, because I'll compare it to other markets. I'll compare them to what bonds are trading in a secondary market. And so we use this as a basis to say, okay, we'll come to terms. And that next morning, the underwriter will go out to market with the bonds for like what we call a 2-hour order period. So the bonds may be offered at 7 o'clock in the morning and the order period ends at 9 o'clock. But during that order period, they're collecting indications of interest from investors. They say, oh, I'll take, $1 million of this, or I'll take, 500,000, or I'll take $10 million, based on those proposed yields. And then during that offering period, we'll be able to watch the bond sale. We'll be able to see who's buying those bonds or who have the investors. And there's been times where I said, have you called the folks over at Tax Free Trust of Oregon to see if they're interested, because they'll buy these bonds and they'll call different funds. They'll call institutional investors, money managers, trust funds, individual investors to get that indication of interest. So if we go out to market with, say, I'll just call it $16 million worth of bonds, and you wind up with $40 million of interest, that's going to allow us to say, okay, now we can reduce those yields lower and see where investors start dropping off. Or conversely, if you have $5 million, $8 million, $10 million in orders, then that might say, well, we underestimated the market and we need to increase the yield. But while this is going on, we're making sure that we can hit this 3% target. If we get to the point where we're going to offer the bonds for sale and we're looking at the numbers, and I'm usually in constant contact with the underwriter saying, where do you think yields are? We'll run numbers, take a look at them. And if the market rates are rising, we may just wait for a better day until we can get these savings that we want to achieve. So we'll know by the time we get the bonds are offered for sale, we'll have a good idea where the market's at, and we'll have a pretty good idea about the appetite of it.
Great.
Fascinating business.
Yeah.
Gosh.
Is this that, I remember you and I talked years ago about blockchain platforms. Is this done through a blockchain platform? Is that how you put these RFPs out there?
No, not yet. Now I use blockchain for like direct bank loans.
Okay.
So the public market hasn't really caught up yet to utilizing blockchain. Now there's platforms that, you have electronic trading and stuff like that, but they're not using the blockchain technology. However, I will say I work closely with this group that has developed this blockchain technology for the municipal market. And we're a year or two out to utilizing it on that basis, where we can put it out on blockchain, and anybody who wants to buy your bonds can submit a bid on the bonds.
Okay.
So but they're still working on some regulatory issues, with the SEC. But we're working on that. So blockchain is not readily available yet for the primary market, I'll call it, for municipal securities that are offered to the public. But we do use it, like with blockchain, I have probably put $300 million on blockchain that have been direct bank loans or private
Okay.
placements. It's
Great,
coming.
thanks.
It's just not
Exciting.
there yet.
Yeah, okay, thanks.
So David, question, the market's still pretty volatile right now.
Yes.
If we went forward with this, do you have any indication of how long we would have to wait to refinance if conditions became very favorable for us to do so in the future?
So this is my personal opinion on how I think the market's going to be going. Within the last month, we went through some turbulent volatility in the bond market in my 30 plus years of municipal finance, I have not seen yields move so much during a day where municipal yields went up higher in rates by 100 basis points. The next day they drop by 80 basis points. Next day they go up 75 basis points, and then they drop 100 basis points again. It's been that I've never seen that in my history of 30 plus years of municipal finance. I think what we're seeing now, the Feds basically have held interest rates. You know, they really didn't do anything with rates.
Right.
But I think what's happening, and there's been a big rush, a heavy volume this month for municipal issuance. But what comes up in June and July is there's a lot of bond calls, bond redemptions, that there's going to be a lot of money coming into the market that needs to find a place to be invested. So I think this summer is probably going to be early this summer. I think going into June and July, I think could be a favorable market. But if I'm wrong, then we just wait for a better day until we can achieve those savings. So we're not stuck. We're not stuck in doing anything.
Right.
But we don't want to miss an opportunity, right? Either way. So.
Yeah. So, and I understand that, and I agree with that, and your explanations have been great. But we're refinancing bond issuance from 2016. And the window opened May 1st, 2025. So my question is, we move forward with refinancing this June 15th, 2025. What is the likely terms for us to refinance if conditions become very favorable? Do we have to wait another 9 or 10 years? Or is this something the
I see
contract
what
would
you're
be
saying.
set up that in 2028, if it was really good, we could refinance again if we hit those magic targets?
Okay, so traditionally, municipal bonds, when they hit up in the public market, there's generally a 10-year non-call period.
Okay, that's what I need to know. Thank you.
Okay.
Good question.
Okay,
But we've also seen, and this is a matter of talking to the underwriter to say, hey, can we push that to say 7 years without any rate penalty? So when you hit the public market, typically you have a 10-year non-call period. So to get an earlier call provision, you can get put in a penalty box one or two ways. Either your yield's going to get higher, or there's going to be a call premium. So you have to compensate that investor for that flexibility to pay them off early.
okay, that
Okay.
answers my questions. Yeah.
Okay. Yeah.
Okay, very good. Wow, that's like taking a class.
Yeah, this is really great.
Yeah.
And that's the presentation.
Don't give me an exam.
Good presentation. You
Yeah.
probably do better than you
Excellent.
thought you would.
No, this was excellent. Excellent. You know your stuff, David.
Yeah,
Well, thank you.
So David, can we just touch on the next steps? So the next steps, we're reviewing a new master resolution from our bond council has developed. And so the plan would be then to come back in June and ask the board's approval of that. And then that then kicks off the process, so.
Yeah, so as Todd indicated, the next steps is right to work on this. So right now, your current master resolution, there's some provisions in that resolution. Like, for example, there's a requirement to fund a debt service reserve fund.
Right.
Or to have some reserve type credit facility that would cover that reserve fund. Well, with your financial status as a district, we don't think that a reserve fund is required. So we're looking to eliminate that kind of restrictive covenant in the master resolution. And we're taking a look at when you want to issue like an additional bonds test, we're looking at maybe reducing down that ratio, the debt service coverage ratio. And that coverage ratio basically says, for every dollar in debt service you have to have like $1.25 in revenues. So kind of a simple way I like to put it is say you have $2 in gross revenues. And of that $2.75 goes to pay all your O&M, which leaves $1.25 left over after you pay all your expenses and operations and everything to pay $1 in debt service. Okay. There's calculation here that uses, you can consider SDCs as part of that revenue to help make that coverage. And when you look at additional debt test, there's certain stipulations that you have to meet. Your revenues have to be a certain level. So we're looking about modifying that a little bit to make it less restrictive. So because we're going to refinance all the bonds from the 2016, there's some covenants and conditions in the current master resolution in which you issue debt that we're going to try to get rid of. So any future debt issuance would be more favorable to the district and more flexible to the district.
Story's just getting better. Wow. Yep, very good.
All right. So that's where we're at for tonight. Tonight is just to present information. Next month, we'll ask you to make some decisions.
Okay.
And don't be scared by the thick document we give you next month.
Yeah.
Are we gonna get it ahead of time? Okay,
So
so we have a
you'll get
chance
it
to
as
look
part of
at
the
it
packet.
before, okay, so come
Yeah.
to us beforehand, okay.
You'll get it part of the packet. And so then I will be there that evening at that board meeting to go through those documents with you.
Okay.
Because there'll be like in a resolution, there's a lot of federal tax law stuff in there. You're like, what does this section 103 of the tax code mean? So I'll be there to go through those documents with you.
Okay.
Well, David, I think this was probably one of the most informative presentations that I've had since I've been on the board. So I appreciate the thoroughness that you've gone through this. Thank you.
Again, it's my pleasure. I work for you, so thank you.
Yeah, very,
Thanks,
very,
David.
very good.
Thank you, David.
All right, thank you, David. Appreciate it.
Okay, thank you, and I'll see you next month.
Yep.
Okay.
Okay, up next, quarterly report update, third quarter, Christina.
Oh, there it goes. Thank you. Christine, good evening.
Hi.
I'm gonna share with you our quarterly report for the period ending March 31st, 2025. Excited to share with you. I'm gonna turn it on.
I can do it manually for you if that doesn't work.
I got it. There, okay. All right, move on to the next slide, please. From March 31st, we should be about 87.5% of our biennium budget. Next slide. For our revenues were at 102.7%. And we kind of saw this coming. This has been the drivers. A lot of this is the interest earned on from our LGIP. And then we do have a small amount that of water revenue. The next, our expenses, they're about 80.2%. In that, personnel services is under budget. We're at 72.8. And again, this is from vacant positions in the fax department, water resources, and operations. We've had multiple throughout this biennium. Materials and services are pretty much right on track at 86.6%. Again, reminding the board that we did have some unexpected water purchases and an increase of contracted costs due to filling vacant positions with contracts. And finally, our capital outlay right now is 68.9, but there are a few projects in the hopper that I'm expecting that to rise a bit. Going to the next slide, you'll see our little graph that shows where we're our budget, where we're actually at, and then the green is where I'm projecting will end. Based upon what I do on this is I look at our actuals and then I take a look at the open POs that we have and then any other conversations we had, and that is how I project where we're ending. So personnel services we're projecting to be about 12.2%. The materials and services, this is one that I want to share. We're projecting to be a little bit over. So we're budgeted at 11,389,000 and we're projecting 11,980,000. Capital outlay, we're also projecting a small, little bit over budget. And again, this is due to equipment that we've had to replace, some aging equipment. So we're projecting that to be about 2.4 million. And then transfers, this one is also a little bit over, and this was due to say last year we had did a 500 from general fund to the CIP, and that wasn't in the budget. So that was, it's just a minor thing, but so that is where that is at, and you'll see more conversation about that later. I just wanted to share that with you. The capital improvement, you saw we're about 51.4% on our expenditures for that. We're working on a few projects, and you also see we did have some carryover going into the next biennium. For grants, we've requested year to date 201,000 for this year, and for this biennium 976,000, almost $1 million. That's awesome. And then for our SDCs, this continues to come. We've had some more come in the month of April, so we're at 174.5% for the biennium.
Very good.
Is there any questions on any of that?
Well done.
Thank you.
Yeah.
Yeah, thank you.
Okay, then we're going to the agenda. Does anybody have anything they need to add or question on the consent agenda? Items 1 and 2? No? No. Okay, we'll take a motion to adjourn.
I move to approve the consent agenda items as presented.
I second the motion.
Commissioner Denell,
Yes.
Commissioner French.
Yes.
Commissioner Ruby.
Yes.
Motion passes unanimously.
Okay. Okay, item 3, consider adoption of resolution number 11, 2025. A resolution establishing retail water rates, system development charges, and miscellaneous fees and charges for services. Christina.
Yes, first I want to thank the other departments for working together and getting the fees together. And also the fax department for helping preparing and their input. You will see here, our water rates are just what is projected and approved at the rate hearing and on the board, and that's going to affect September 1st. The SDCs, the SDCs is just based upon our engineering, the CCI, is that correct? That's the rate. Yeah, so that is the increase for that. And then you'll see here our list of fees, and on the very last couple of pages, and you'll see exhibit fee, and that just shares with you the difference between last year's, this current year's fiscal year's rates and the changes that we're suggesting. So Nothing too big, and I think the equipment, they were suggesting about a 2.5% increase going down. But nothing too surprising.
Any questions or comments?
No.
Take a motion.
I move to approve resolution number 11-2025, updating Clackamas River water rates, SDCs, fees, and charges.
I second the motion.
Commissioner Danell,
Yes.
Commissioner French,
Yes.
Commissioner Rubishon,
Yes.
motion passes unanimously.
Okay, number 4, consider adoption of resolution number 12-2025, updating the wholesale water rates charged to North Clackamas County Water Commissions. Christina.
Yes,
Welcome back.
it's me again.
I've seen you for such a long time.
So this is, we're suggesting that a percentage increase for our wholesale water rates for North Clackamas County, an increase of 2.6%.
Questions, comments? I'll take a motion.
I move to approve resolution number 12-2025, updating the wholesale water rates charged to North Clackamas County Water Commission in CCWC effective July 1st, 2025.
I second the motion.
Commissioner Danell,
Yes.
Commissioner French,
Yes.
Commissioner Rubishon,
Yes.
motion passes unanimously.
Okay, item 5, consider the first reading by title only of resolution number 13-2025, adopting Clackamas River Water Investment Policy.
It's me again.
Yes, it is.
Thank you for letting me, for this one, as you can see, the last time this was, amended was in 2014. So we wanted to take a look, we worked with Mr. Sterringer on getting it updated, and that is what we're bringing forward to you. Again, going through it, there's not a ton of changes the way it's, but it is presented and more aligned with the best practices of how we use it, sorry. But look forward. Do you have any questions about
Oh.
it? It's the first reading.
Okay,
No,
now take a
no.
motion.
Oh, you don't have to read anything, or you're gonna read it after we
Well, you have
motion?
to,
Okay.
yeah.
Oh,
Okay.
do I actually read it out loud?
Just,
After
after.
the
they do
motion, okay.
Then just-
I
That's
move
just
the
the top.
board to conduct the first reading by title only of resolution 13-2025, adopting the Clackamas River Water Investment Policy.
I second the motion.
Commissioner Danell,
Yes.
Commissioner French,
Yes,
Commissioner Rubishon.
Yes.
Motion passes unanimously.
So just read
and then just do the title.
of the resolution.
Title of the resolution? The title is consider first reading by title only of resolution. Is that what you're talking about?
No,
Sorry.
or you want me to, I'll just do it.
Yeah, sorry.
So, so resolution, Clackamas River Water Resolution 13-2025, a resolution for adopting Clackamas River Water Investment Policy.
I get it. The resolution title,
Sorry.
sorry.
I threw more confusion in this. I'm waiting for you to read it. I was like, aren't you gonna read it?
Number 6, consider adoption. Consider adoption of resolution 15-2025, approved by NEM 2023-2025 budget appropriation transfer. Christina.
Next one. Okay. And kinda already gave you some background on this. We are bringing this to the board based upon the information, that we are projecting ending the biennium. We're projecting we're asking to move 1.4 million from personnel services. Again, that's due to vacant positions throughout the biennium. We're gonna move 700,000 to materials and services to partly cover that contracted costs from the vacant positions and also to cover the water purchases. 200,000 for capital outlay because we have had to do some equipment replacements, some updated equipment that was not on the budget. And the final is the 500,000 from the transfer. And again, that was from general fund to the CIP. So overall, to the general fund, there is no change in budget. It's just moving it from one appropriation to the next.
Okay, any questions or comments? I'll take a resolution or motion.
I move that the board approve resolution number 15-2025, authorizing appropriation transfer within the general fund for BN 2023 to 2025.
A second motion?
Commissioner Danell,
Yes.
Commissioner French,
Yes,
Commissioner Rubishon,
Yes.
motion passes unanimously.
okay, number 7, consider approval of resolution 1425, request for annexation into CRW service boundary for property at 16944 South Patton Road.
Not Christina.
No, not Christina.
I was like,
Fox's
thank
daughter.
you.
Thank you,
Good
Christina.
So actually, I'll just point out for the board that items 7 and 8 are related. They involve the same property, but just kind of different steps in the process. The first item that we're asking you to approve is on the agenda item 7, is actually the approval of the resolution that allows this property to be annexed within the district. So currently they're outside of our district boundary. They have a building permit. They would like to build their home. In order to get water service from us, they have to annex in the district. This is out on Hatton Road. We literally have everybody on the other side of the road is in the district. They're a piece of property that's in an area that's outside of
So
our
they got some
district.
FOMO,
What's that?
some FOMO. They're envious.
Fear of
Oh,
missing
Yeah, they
out.
wanna come
Oh,
over to
yeah,
this
there's
side.
I think they just want to make sure they have good, clean water.
Sorry,
Gosh,
giving you a hard
I'm showing my age, I guess.
Keeping you up on the lingo.
Yeah.
Karen's got your back over there.
Okay, thank you, Bob, I feel
What
better.
is that?
Do you think I want
You're
to
gonna
say
stop
stop?
me later.
Okay, sorry.
So anyway, the long and
Sorry.
short of it is in order to annex into the district, that is a process. And so we want to initiate that process, but the way to do that is we need you to adopt a resolution. So that's what we're asking you for tonight.
Okay, any other questions or comments? Take a resolution.
You want a motion, you mean?
Motion.
Motion.
She wants
Resolution on the break.
resolutions tonight.
Yes.
So question, do you want me to read 7? We passed
Yes,
it and then I read
yes, sir.
8.
No, just
Oh, just-
do 7.
Oh,
first.
even though they, okay,
Yeah,
you weren't
they're
covering
related,
both.
but
Okay.
we'll do them.
Okay, I move to approve resolution number 14-2025, endorsing annexation of territory into the jurisdictional boundaries of Clackamas River water for property located at 16944 South Hatton Road, Oregon City, Oregon.
Second motion?
Commissioner Danell,
Yes.
Commissioner French,
Yes.
Commissioner Rubishon,
Yes.
motion passes unanimously.
Okay, item 8, consider approval of temporary service outside of district service boundary to property at 16944 South Hatton Road.
All right, so this again is related, same property. So the annexation process is not instantaneous. And so the folks, the property owners would like to move forward on building their house. And in order to do that, especially given their permit conditions and timing and so on and so, in order to do that, they're asking to be, have a temporary service allowed for that property until they are annexed in, which they'll become full mill deal. They are still going to be subject to all the regular fees and charges associated with doing that new service, so we'll collect SDCs and all of that, so. It's again, just a way to kind of help bridge that gap until they're fully annexed. And that's it.
Sounds reasonable.
Okay, take a motion.
Hey, I move to approve the temporary service outside of district service boundary to property located at 16944 South Hatton Road in conjunction with agenda item 7, endorsing annexation of said property into the jurisdictional boundaries of Clackamas River water.
Second motion?
Commissioner Danell,
Yes.
Commissioner French,
Yes.
Commissioner Rubishon,
Yes.
motion passes unanimously.
Okay, number 9, management report.
All right, you have your report, starts on section 9. Couple things just to quickly highlight. Well, actually, before I get there, a couple things. We've already went through most of the stuff in your folder. So as far as the consent agenda items and slides and so on, you have your monthly report. I thought one thing that was interesting in the report, just to note, is we talked about paying off the previous debt. And I thought, how can we illustrate that? So actually, if you look in the page 5 of our expenditures through April, you'll notice in fiscal year 2021, that debt service payment at the top was much higher. And then it dropped down, and that was a reflection of the fact that we paid off that one, 20 or 1999 series debt. And so, and then if you keep going forward into that 2024 period, when you notice it bumps up, that's a reflection of how that current financing works, where interest rates bump up at certain periods. Okay. So I thought that was a handy illustration. As far as the report itself, I don't have anything significant to point out, the typical information that you're used to. I think the only thing I would note is the last page, page 13, where we give you our snow water equivalent. Unfortunately, we've bottomed out now with respect to that.
It's the snowpack.
The
right,
snowpack.
on this.
Right, the water equivalent, the snowpack. And so next month we'll be switching to the river flow graph that you normally see in the summers.
Well, the temperatures are dropping next week and it's supposed to rain all week.
That'll help.
So,
Maybe some water at least.
real quick, you also have a copy of the Clackamas River Water Providers newsletter. So a lot of good information on what's taking place with respect to other providers, including ourselves in the basin. Wanted to spend just a moment in your written report. We have Riverside Park. There's a number of different activities just to make the board aware of. We already talked about at the last meeting, the Little Leagues opening day, and thank you, French, for throwing out that first pitch. But there are some other challenges associated with the park that I just want to make sure the board is aware of. So we're having some issues with trash, and so we're going to we're going to try actually removing the trash bins that are out there. And make it so that people don't use it as their new dump spot.
Yeah.
Now, we're gonna see how this works, but right now, those trash bins are being used for things that are not park trash related. So we'll still have the normal cans and stuff that will be there, Little League uses, all of that sort of stuff, but we won't have the dumpsters anymore. But beginning Memorial Day weekend, we're gonna do once again, have a resource officer there as well. So we'll have at least a 8-hour day presence. And that's usually over the weekend. It's 5 days a week, but we definitely do the weekend. And then if there's a holiday, we make sure we capture that because those are the heavy park periods. And we've seen value in doing that. Just again, having that presence, they're able to help coordinate, with law enforcement and help kind of develop that rapport with some of the park patrons and so on. So I work with the Little League if they're around, when they're around. One other thing to note is we do participate with Clackamas County too, just so you're aware, on that exclusion program. So if somebody is violating rules, our rules are based on the same as the county parks. People are doing things that violate the rules, then we have the ability to have them cited, and so they will then be excluded from the park. So, and we've actually had to do that, and I didn't realize that the general manager is the one that gets to be the judge, and so actually they file an appeal to me, and I get to know if they're excluded or not.
Wow.
That's kind of weird. Wasn't used to that. That wasn't in the job description. That was a little different. But anyway, the reason I'm bringing that up is one, to create awareness, but two, also to let you know that we've re-upped that agreement with the sheriff's department. So we'll have that in place again. So thank you, Karen, for coordinating that. Also, and then I thought kind of a fun thing to just be aware of is we've been working with Clackamas River Basin Council, and they're coordinating with an artist to put in a metal sculpture down at the park, close to the kiosk associated with the river trail information and so on. We've seen some preliminary visions. It's to try to highlight some of the Native American components of the of the river, and, actually, there's gonna be sculptures that go out the different parks, and so we're one of those parks that will receive one. It's heavy duty metal, so we've warned them, there's interesting things that could happen at the park, but they feel very confident, in their design and, yeah, just kind of a fun way to honor what's taking place.
When is that going in?
We don't know yet.
Okay, you'll let us know?
Yeah.
'Cause there'll probably be like a ceremony, right? Something that they'll do to unveil it or celebrate it.
I don't know what they have planned at this point, so.
They really just let us know that they're waiting for sometime this summer.
Okay.
They're also gonna put some nice boulders in where some concrete barriers are currently down there. Make that whole area look a little nicer.
Lovely. Yeah. Okay, I can't wait.
Yeah, we'll definitely let you.
Yeah, please, thanks.
So, and obviously I looked at Karen on that, because Karen's been doing all the heavy lifting as far as coordinating with them and coordinating with our staff on doing some of the other heavy lifting that needs to take place associated with it. Real quick, just thank you to Commissioner Goodell for attending the North Clackamas Chamber of Commerce and State of the Cities
Oh,
events and stuff, so that was good. I don't think I have any earth-shattering thing to share from the mayors they shared. But as there was definitely a lot of, we got a fair amount of recognition at that, so had to sit right in front, so.
We were in the front row.
I was trying to stay away.
Right in the front.
What fun.
It was good though. It was really.
And then under, just skipping through on the special districts, a variety of legislative things that highlighted 2 pieces of legislation. However, one, at the bottom of that page, do want to highlight the fact that at the federal level, we've always been working with the national, sorry, they just changed their name and it always is messing me up, the National, Special Districts.
Fairness and Accessibility Act.
Right, so that's the legislation that's being introduced.
Okay.
Is the Special District Fairness and Accessibility Act. And again, this is to have recognition of special districts at the federal level. So just to remind you why this is important is because like when the money was given under the ARRA, that money was allocated directly to cities, counties, and the state. And even though we had a good chunk of those projects, those dollars would have been used for, we weren't given a direct allocation to that. And so that was one of the pieces that really highlighted the importance of having that recognition. We got really close last Congress, and so got passed through the Senate and then just ran out of time. And so now we're approaching this again, and it has pretty broad bipartisan support.
I think so.
So one of the things I'm just making the board aware is they're asking for districts to sign on in support of that. So I was going to add Clackamas Rural Water's name to that. As far as looking ahead, just so you're aware, I'm actually out on vacation next week.
Have fun.
And so Christina, in addition to giving all the presentations, is going to be in charge next week. So, so she'll be acting in capacity on my behalf. Also, just a reminder, we'll be closed on May 26th to observe the Memorial Day holiday. And so there's also no May 4 work session in May. So, and then our agenda setting meeting, I think you have it on your calendar.
Yeah, I was just gonna confirm. I think I put it when we were sitting down.
May 29th at 9:30. And then our reserve board meeting, which will also include a budget hearing, will be on June 12th. So we've included the notice as it relates to the budget hearing in our bill insert. And we'll do our typical, obviously the website type things. We also have to advertise in the newspaper with respect to that. So that is the public hearing that the board will be asked to actually adopt the budget. Okay. So that's the final step. Okay. And a couple things just to make you aware of that aren't in the agenda or aren't in the report. One, backflow notices are going out. And so this is a good reminder. My public service announcement is we have a number customers that we require them to have backflow devices. One of the requirements, a state requirement actually, is to have that device tested annually. And so we send out the notices to folks, make sure that they're in compliance, ask them to work with the tester to get that taken place. And then I know I've mentioned this before, but I'll mention it again. The Red Cross Blood Drive will be hosted here at CRW is on Tuesday, June 24th from 9 to 2. So again, appreciate Petabora for getting us coordinated and signed up and encouraging people to provide blood. And then one thing just for you to, I think it's just kind of a interesting timing. One of the projects, actually, we're going out to bid here and advertising it next week is some crossings under 205. And that's a significant capital improvement project that we have moving forward. Unfortunately, right now we have a crew that's out working on a leak that is impacted by the pipe that's going under 205. And so, yeah, so I think we're wish we probably would have taken care of that, but if you've noticed we had a little bit of an issue with some water running on 205 earlier today, but they're working hard on it right now. So, so appreciate, yeah, Reese Foxworthy and kind of leading things on site, and getting the rest of the folks together and kind of coordinating different contractors, because yeah, it's not a good location for that. So, but appreciate that effort and their work tonight on that. Anyway, but I thought it was interesting. We're getting ready to go to bid. We had the project, ready to go, and we have a leak. So, but it's the way it works sometimes. With that, I think that concludes my report. Unless there's any questions.
Okay, well, there's no public comment. I forgot my commissioner report sheet, so you just out of luck. What's that? Sorry, but Oak Lodge and Sunrise weren't that exciting this past.
Wow. Sorry, Kevin.
Yeah. So, is there anything else?
Todd mentioned that we went to that event and it was great. That was second that.
I
Okay.
have one thing.
Oh,
So, one of the things that, I just wanted to mention a experience that I had this last week. And it really brought home the importance of all the work that is done here at CRW and the board of kind of keeping costs down. And, I know we can't keep them down completely, but, I have, the privilege of working with a master gardener, and he grows plants, mostly vegetable plants, from harvested seeds and from his garden. There's a whole process that's really fascinating how he selects the viable seeds out of his garden, stores them over the winter, early spring he plants them in the greenhouse, and then we transplant them. He grows them for family and friends, and then gives them to other people. But just this last week, we notified a couple of people when those vegetable starts would be available. He doesn't sell them; he just gives them away, and I mean, he does a really good job. 2 separate people said they're not going to have gardens this year.
a lot of people aren't.
And we said, well, why? And they said, we can't afford the water. And these are people that are in their retirement years that don't travel, don't have a lot of other things. Their enjoyment in retirement has been their gardening. And it just struck me how important it is when we look at refinancing the bond to save $1 million, and we do this and we do that. There would be a lot more people that would be in that same situation. And when I told my friend about these, he said if he wasn't on a well, he wouldn't have been able to grow all these plants to give away to family and friends in the community. And it just made me aware just how important water is and how important affordable water is. So we just need to kind of keep doing what we're doing and keeping a focus on saving pennies here and pennies there. Because there's people out there that their lives are changed because they can't afford to have more water than what's absolutely necessary. So,
What a meaningful story. Thank you for sharing that.
oh,
How lovely that he does that.
oh, he's great.
How wonderful.
Thousands of times.
Yeah, that's incredible.
Yeah.
Oh, mine had all died anyway.
Yeah,
I don't
I'm not
know.
much of a green thumb.
No, I'm not either. Okay,
Wish I was.
anything else? All right, then it's 7:22 and I'm adjourning the meeting. Thanks, Kevin, thanks, Bob.
Thank
Good night.